Hey guys, welcome back to the channel. Today's video, we're going to be looking at the pros and cons of real estate investing. Now, when it comes to real estate as an asset class in the investment portfolio, it adds another level of diversification, similar to what cryptocurrency does. Now, there are some other options such as REITs, which we'll get into, which are real estate investment trusts. It is a passive hold of kind of dividend paying stocks is kind of what they're built, but instead of being in the stock market invested in specific companies, it is buying and holding rental properties to create cash flow and capital appreciation. Now, personally, I do have a couple REITs that I'll talk about again in a little bit, but let's go ahead and get into the pros. First of all, real estate appreciates over time. Now, it has been a well-known fact, guys, that short of 2008 with the housing market, the real estate market has appreciated over time. And even if you had an investment from then to now, it would be worth a considerable amount of money than what you originally put into it or what you lost during that part. Now, a lot of places will also invest in up and coming markets. Even locally here, we do have the Detroit market, which a lot of people are getting into with rental properties just because of the price of rent that is literally going through the roof pretty much nationwide to have really a passive income. Real estate has a unique tax advantage as well. Really consult a tax advisor, which I am not, but depending on your income level and classification, real estate, seek a real estate professional. There's a good chance rental properties will give you a tax advantage that you can use to offset income. Now, if you're familiar with this at all, guys, this is what a lot of the wealthiest people in the nation do, is they offset a lot of their income with real estate because of the tax advantages that are provided. Now, real estate also provides a steady cash flow as a monthly income that is mostly passive. Short of doing repairs, maintenance, things of that nature, most of the real estate properties are, again, relatively passive when it comes to the income, allowing you to spend time away from the business, time with family, reinvesting and buying more real estate, which is what a lot of people do. Now, real estate also allows you to use leverage. Now, leverage is using essentially the value that you have in the home to go ahead and borrow money to invest in other real estate, different places, or even using cash out of a house to purchase more real estate. So for example, using an investment of $30,000, you get the opportunity to control and you get the benefits of owning a property. Let's say the asset's worth $150,000 because you're taking out a mortgage for this. Now, as you continue to pay this down, you can go ahead and leverage some of essentially the equity that you're building in the property, in the home, in the apartment, whatever it may be, to go ahead and use and borrow more. So number 5, guys, we get into you don't need much startup capital. Now, this can be true when you're utilizing something like I am, which I do use Fundrise. Now, Fundrise is a company, and a lot of companies have started doing this now that are selling REITs, and they are essentially buying into markets and they are allowing you to invest money in those markets in these REITs. We've seen Fundrise, we've seen Realty Mogul, Street REIT wise. There are a lot of different companies. Now, one thing you have to pay attention to is what are the fees for these accounts and how much do you need? Some of them are, $100, some of them are $5,000 to get started. And then there are assessed account fees or investment fees, things of that nature. But it does allow you to get into the REIT market without having to physically own real estate. Now, number 6 gets into real estate builds equity. We talked about this, guys. So essentially, if you purchase a house, let's say it's $300,000, you are renting it out. The rental income is paying the mortgage as you own and as you build equity in there. You're essentially having someone else pay down the debt that you owe, and that way you are making your own equity in that property, because there will be a point where it's paid down or it's paid off. And if you're not using any of your own money to go ahead and pay that down, you are still having the equity. The real estate also does give you a level of control because you can invest, you can buy and sell, even though it has a little bit more of a process. You can buy and sell property relatively easy. You don't have to stay at a 9-to-5 job. You can really work when you want. When you start getting real estate and real estate investing, you can put as much time and effort as you want into it. If you're faster paced, if you're doing a bunch of deals, things of that nature, you can hustle. Competitive market, you can make a lot more money. Now, in addition, guys, real estate does provide hedges against inflation. So just as we've seen inflation go up in 2022, 2023, real estate prices have went up a ton, and actually real estate has went up much faster, much more reliant, even through inflationary times than we've seen with the stock market. 2022 was absolutely brutal for stock market, but if you're renting out a place and charging more for your rent, you can hedge a lot of those inflation. But with that being said, guys, there is a big downside to real estate investing, which we cannot overlook and you cannot take for granted. Number one, real estate requires money. That is right, guys. Not only a good credit score and the borrowing power, but you have to borrow or have money to buy property. There are down payment requirements. There is a lot of different things. Now, to really get around this requirement for the high entry point of money, you can do the fractional real estate investing, like we said, with crowdfunding, things of that nature, like Fundrise. You can go ahead and just fractionally put money in. It's not you shelling out $150,000 for a home. It is you putting $100 a month into something to own the REIT. Now, another one, guys, real estate takes time. That is right, guys. If you are specifically looking at real estate and purchasing real estate, you have to know who's moving in there, what they're taking care of, what is going to be the rental income in there, but what also is going to be the maintenance costs. What is it going to be for having the tenants in there? If you have to evict the tenants, if there's issues with the home, that is the reason why a lot of people do shy away from real estate investing, is there is a big cost. Now, also real estate is a long-term investment. Most houses you cannot flip in a matter of a day, where if you liquidate stocks, if you liquidate bonds, things of that nature, you can usually get the money very quickly if you're looking to get it into your account, where a lot of real estate is a much longer term investment because you actually have to list the house, you have to sell the house. Again, a lot of cost and a lot of money does come with it. The real estate can also be problematic. This is really hard if you have tenants that do not pay. If they leave the property in damaged conditions, you're going to be footing a lot of the cost to repair a lot of the damage that poor tenants did. Or if they're not paying rent, things of that nature, now you're looking at court costs. Now you're looking at having law enforcement legally. What can you do to get those tenants out? Now, real estate benefits don't always apply. Again, we talked about this. Consult a tax professional with an expertise in real estate, so you know if you're going to get the tax advantages of having real estate. Real estate also has a very unique risk, guys. Buying at the wrong time, you could see a market drop like we seen back in 2008. You could see the market actually soar. Increased liabilities for things that happen on your property because it is a rental. You could be stuck with professional renters that work the legal expense, work the legal system at your expense, or really get over leveraged. This is what a lot of people do, guys, is they see a lot of homes for cheap. They buy them up, they fix them up, things of that nature. Unexpected repairs, maintenance costs, vacancies. If you have a place that you bought that you're looking to rent out and you cannot find any renters in your area, then you're stuck footing the bill, which again can be super, super expensive. So bottom line, guys, really take a hard look at the pros and cons when it comes to real estate investing. Diversify investment portfolio is really a good thing, but you get monthly income, you get rental income, and better long-term capital appreciation when it comes to investment properties versus just putting the money in the stock market. Guys, that'll do it for today's video. Let me know in the comments what you guys think, and as always, thank you guys for watching.